Even though tax is considered as a national subject, it is a fact that a country's tax system is very important for somebody who has any coincidence with that country, since everyone is a taxpayer when in the national borders of another country. It is of course not possible to talk about every detail of a tax system of a country in such short time, but let's simply understand the principles of taxation and the tax system of Turkey. This video will include more theoretical information rather than practical ones. There are 4 different criteria that can be used when classifying taxes. First is personal situation of the taxpayer. Second, the person who pays the tax and the person who carries the tax burden. 3, the scope of the tax. 4, tax economic resource. In general, the criterion used is based on the difference between the person who pays the tax and the person who bears the tax burden. In other words, indirect taxes and direct taxes distinction. Although it does not cover all the taxes in Turkish legal system, let's briefly examine the taxes we see in the table by asking the following question. What is this tax? Who is liable to pay this tax? Where is it taken from? Why is it taken? First, taxes on income. Taxes on income are income tax and corporate tax, and the most important fundamental difference between them is while income tax is collected from real persons, corporate tax is collected from legal entities. Let's examine income tax first. Income tax is a tax taken from a real person's annual income, where income tax is collected on income and it is the net amount of earnings and revenues obtained by a real person within a calendar year. The following earnings are subject to income tax: commercial gain, agricultural income, fee, self-employment earnings, real estate capital income, income from securities. After deducting the expenses, depreciation and losses incurred to obtain the profits and revenues, the tax is charged on the net amount remaining. Income taxpayers are natural persons. According to the law, income taxpayers can be listed as full and limited taxpayers. Full taxpayer persons are those who have settled in Turkey or are deemed to be settled in accordance with the law, and the earnings of these persons in Turkey or out of Turkey are subject to income tax. Real persons who are not settled or not deemed to be settled in Turkey, who are called limited taxpayers, are subject to income tax only for the income they have earned in Turkey. Second, corporate tax. Corporate tax is the type of tax levied on the net corporate earnings of corporations within a calendar year, where corporate tax is collected on corporate earnings. In other words, the subject of corporate tax is income. The main factor that separates corporate tax from income tax is the point of liability. So the question to ask is who? Taxpayers of corporate tax are capital companies, cooperatives, economic public institutions, economic enterprises belonging to subjects or foundations, and business partnerships. The capital companies here are joint stock, limited liability companies, and limited partnerships whose capital is divided into shares, and foreign institutions of similar nature, established in accordance with the provisions of Turkish Commercial Code. Private companies are not taxpayers. The principle of full and limited liability also apply to corporate tax. Second, taxes on wealth. First, motor vehicle tax. The tax paid annually for motor vehicles, airplanes, and helicopters is called motor vehicle tax, where motor vehicle tax is collected for motor vehicles, but its base is specific. In other words, the amount of tax collected will vary according to physical measures such as age, cylinder, volume, number of seats, maximum takeoff weight of the motor vehicle. The taxpayers of the motor vehicle tax are the real and legal persons whose motor vehicles are registered in the registry of Turkish institutions. There are exceptions that apply to MVT, for example, vehicles registered in the name of the disabled. MVT liability begins with registration and is accrued annually at the beginning of January each year, paid in 2 equal installments in January and July. Second, inheritance inheritance and gift tax. What? Inheritance and gift tax must be paid in case of gratuitous transfer of goods belonging to individuals and goods in Turkey from one person to another, where those who acquire property gratuitously through inheritance, those who make joint bets on football competitions and horse races, and real and legal persons who organize contests and raffles are obliged to declare the taxes with a declaration. Inheritance and gift tax is a progressive tax. It is a progressive tax of between 1% and 10% on inheritance, and between 10% and 30% on donations, grants and gifts. In the lottery and games of chance, it is 10%. Who? The taxpayer of the inheritance and gift tax is the person who owns property by inheritance or gratuitously. Inheritance and gift tax is paid in 3 years from the date of accrual. Third, real estate tax. In other words, building and land tax. What? Real estate tax is the tax collected annually in 2 equal installments from immovables such as land, building or workplace, where the property tax consists of 2 sub-taxes, the building tax and the land tax. According to building tax, buildings located within the borders of Turkey are subject to building tax in accordance with the provisions of the law, and tax is paid in accordance with the determined tax value of the building. The rate of building tax is 1 per thousand for residences and 2 per thousand for other buildings. According to the land tax, the land and plots located within the borders of Turkey are subject to land tax, and tax is paid according to the determined value of the land, and the rate of land tax is 1 per thousand, and for lands it is 3 per thousand. Who? The building and land tax is paid by the owner of the building and the land, the usufruct owner if any, and the owners of the building and the land if both are not available. Unemployed, disabled, housewives and retirees, depending on some conditions, are exempt from property tax. Okay, so the third tax is on expenditure and consumption. First of them is value added tax. What? VAT is an expenditure tax that is paid by the deliverer of goods and services but charged to the recipient. It varies from 1% to 18%. What? Deliveries and services within the framework of commercial, industrial, agricultural and self-employment activities. Deliveries and services arising from and other activities made in Turkey are subject to VAT. Examples of other activities are mail, telephone, telegraphy, radio and television services, or concerts and sports activities. The taxable event in VAT is the delivery of goods. Who? VAT taxpayers are those who perform all the activities mentioned. For example, the delivery of goods and the performance of services. Since value-added tax is an indirect tax type, the person who buys the goods or services will pay a certain fee to the seller, and VAT will be paid with a certain deduction from this fee. Second, special consumption tax. What? It is a type of tax that is taken on a fixed or proportional basis on a certain goods or product, where SCT is applied to goods that are luxurious and have negative effects on health or environment. In this respect, it is a type of tax that aims to provide social benefits in luxury products such as fur, luxury cars or jewelry, in products that may be harmful to health such as cigarettes and alcohol. It is applied in products that are harmful to the environment such as gasoline, coal or fossil waste. Who? SCT arises due to the import of the goods or the delivery of the produced goods to the first buyer. In motor vehicles, it is necessary to pay SCT on behalf of the final consumer. The taxpayers are the importers and the first sellers. 3. Stamp duty. What? Stamp tax is collected to certify the validity of contracts and agreements made between individuals and institutions, where it is taken from the papers documenting all kinds of legal and official transactions between individuals, institutions, or between individuals and institutions. In order for the stamp duty to be collected, the documents must be presentable or signable, or it must contain phrases that replaces the signature. Who? Taxpayers, persons who signs papers that are covered by stamp tax law and have an official qualification. If one of the signatories is an official organization or in an exempt state, the taxpayer is the other party. Thank you so much for listening to me. This video contains a really brief explanation on the tax system of Turkey. I hope you get a little information of what's going on. If you have any more questions, you can just ask me in the comments.